What is going on, guys? We're going to go live here. Talk about some of the stocks I'm buying right now. All that good stuff. I want to start doing a little more live streams on this channel. I'm super excited to start doing these. I'm going to show you everything I'm buying and selling. Show you guys my option strategies. Right now, we're at 201,000 buckaroonies. We'll go over my positions a little bit. And I want to go over my watch list too. Account's down a little bit today. A lot of red today, but I'm down 15,000 in the main account. But my options, my covered calls are up about 13,000. So we're about breaking even for the day right now. Go over some of my positions real quick. We got Adobe. I got 22 shares of Adobe. I'm still building out this position right now. APLD, I got Big Bear AI. I got 300 shares of that. Some Butterfly, some Canadian Solar. I'm starting to build out this Celsius position now. I want to get that up. I'm trying to get that to like 1 to 2% of my overall portfolio. CleanSpark getting smoked today, but that's good because I got a lot of covered calls on CleanSpark. So if that calms down a little bit, I'm all for that. I think the stock is kind of a little bit out ahead of itself right now. They're like jumping on this AI trend, but like, what are they going to be doing with AI? I'm not really sure about that. I started building out some QBTS. I got some DraftKings. I got some ELF on a shelf. I think that's a really good buy right now. Got about $2,000 in cash. So I'm just slowly building out these positions. I'm going to buy some ELF right now live for you guys. Buy 5 more shares. I think anything under 60 bucks a share long term is a really good deal. So that's kind of what I'm looking at. I just started buying Netflix too. And I'm also buying this triple leveraged Netflix. I think when it runs, it's 2x, sorry. Double leverage. I'm going to buy some shares of that for us too while we're sitting here live right before the bell closes. I think this could run exponentially. I love myself some Netflix right now, guys. And as all you know, if you follow my channel, I'm a big SOFI investor. I got a shit ton of shares there for sure. We got in this big dog account about 6,500 shares. Well, right on the money at 6,500. I added some a little earlier this week. And in some other accounts, I own about, I don't know, maybe 600 or 700 somewhere else as well. So we're right around 7,300, closing in on 8,000 shares. I'm starting to build out Stone as well. And if I have like 1 share or 5 shares, I'm just kind of watching the position. I am adding to this uranium position to UEC. I think that's a good play. It's up huge today, up 13%. So I like that. I'm like nibbling away some serious radio. I do like the dividend player there. And I do have these dividend players here, JEPI and JEPQ, that are getting between 9 and 11.5%. I like those to just get an infusion of cash every month for us there. And then here we go, 6.5. All these are expiring this week. Got a lot of green here for us. We got 2 in the money right now. Canadian Solar ran huge today. And then I'm going to roll Big Bear AI out as long as it stays in this area. I'm hoping it goes under $5 by the end of the week, but we'll see how that kind of works out there. If you're new to the channel, my name's Jay. We just crossed 5,000 subscribers. So I'm going to start doing this every Tuesday and Friday. I'm going to go over all my buys and sells for the day. I had to take my dad to the airport today, so I was a little bit off schedule. And then we could just see all my option plays for each week. I'm going to go over my buys, my sells, my rolls, my closeouts. So if you want to see what I'm doing each and every week, make sure you subscribe to the channel. And we can see, I'm going to go over my watch list for you guys, kind of talk about what's going on with the watch list. Some potential ads for us here. We'll rank this by percentage change. MNTS is the biggest dog of the day. Momentous Inc. getting beat up today. Pretty good there. Getting banged up. Commercial Space Company That company offers satellites, satellite buses, solar arrays, and other satellite components. These could be a player in what's happening with SpaceX. So that's one of the reasons why I like them and put them on my watch list. New Holdings is down 8% today. ServiceNow, I did buy a little position of them. So I'm going to delete this from my watch list because they're in my current portfolio. I think that's a good deal. A lot of administrative heads in Congress are buying the shares. There are rumors that Trump bought the shares as well, ServiceNow. So cake is, where's it trading at? So I always like to look at the 52-week range of like these stocks and say, like, oh, okay, where is it trading at in regards to this 52-week range? I'm not a guy who likes to buy stocks at the peak of the 52-week range. Like Cheesecake Factory, trading a little rich right now in the $64 range. Earlier this year, $43 it was at, right? So it's run up considerably. If you guys want to leave me any stocks you're looking at, let me know in the description down below. I just want to, hey Nancy, what's going on? So yeah, I'm going to just keep going over everything that I'm working on right now, how we're making money in this portfolio. We're having a really good couple of years. If you take a look at the summary of our account over the past 2 years, we're up 147%. And that's with SOFI taking a nosedive, right? So we'll be up well over 200% in the last 2 years, significantly outperforming the market. So that's why you guys got to like and subscribe to the channel. I think Netflix is a really good buy right now. We'll start to get into that in a little bit. I'm going to break down Netflix for you guys and why I think it's a really good buy. I think they're going to be huge. Like a stock like Intel is up huge from $18 a share up to $132. I have no interest in buying that stock at all right now at these inflated prices. So that's kind of where I'm at right now. If you're at or near the 52-week highs, I would avoid those potential positions, or you could sell some cash secured puts. That always works out really well to get a better price on some companies that you do like. Penny's waking up from a little nap, shaking it off. Some of these banks are running hot right now, like Citizens Financial Group, trading at $62 when it was under $40 in the last 52 weeks over the last calendar year. IonQ is definitely a company that I am interested in, maybe at a better valuation right now. A lot of these AI companies have run up considerably, so I'm definitely not trying to buy them if they've run up so much. It's kind of like where I'm at right now. I do want to take a look at Netflix right now for you guys. This is one of my favorite companies to buy right now. If you take a look, I mean, the stock is getting wrecked over the last year, down 31% from a year ago. I mean, these numbers are crazy, guys. It was trading at $125. It's in the 80s right now. I think this is a long-term buy for me. I just think this stock is going to continue to print money. I just don't see a situation where Netflix goes out of business or like doesn't continue to be a trendsetter in this market. Netflix valuation metrics have improved significantly, with the EV to EBITDA ratio decreasing to 11.97 times in Q1 2026 from 20.38 times in Q2 2025. So a lot of these metrics are looking significantly improved. The forward PE is a number I always like to look at. You know, back in June of last year, the forward PE was at 53. It's at 26 right now, so it's been cut in half. The price to earnings growth ratio under 1.7 is a great spot to be, in my opinion. I just love Netflix overall. I think this is a really interesting time to get in. The revenue is crazy. Quarterly revenue growth still at 16%. For a company this big growing that much, I think this is a great buy, in my opinion. When we're getting the forward PE in the mid-20s, the total cash to debt ratio is very manageable considering this levered free cash flow over the last trailing 12 months of $26 billion. only $16 billion in debt. So I think they could whack this debt load off pretty easily, in my opinion. And if you take a look, held by institutions, 85% of the shares. Share short percentage is at 2%. I just don't know why the sell-off is continuing to happen for Netflix. I think it's a really good buy right now. I just opened up a position. I just bought my first 10 shares, and I'm going to continue to buy this stock under $100. I think under $100 per share is a great place to be. I'm going to buy 2 more shares right now for you guys live. And since we're after hours, we got to change our order type to day plus extended hours. And I'm going to get it under my cost basis. I want to get my cost basis under, I would love to get it under $80 if that's possible. I think selling cash secured puts in that $70 to $75 range is great. But it just continues to sell off. The momentum is not there for Netflix right now. So I think we can take advantage of that. Over the last 6 months, down 23%. Year to date, down 11%. It bottomed out at $76 and then went on quite the run up to around 110. And then since then, it's just sold off considerably. The CFRA has it a 4-star buy. Argus has it as a buy. I'm kind of in that camp. I think this is a really good time to buy this company. And if you take a look, 3 out of the last 4 quarters, they beat on earnings per share. And the estimate of 76 cents, and they came in at $1.23 last quarter, just blew expectations out of the water. I think Netflix, the PEG ratio at 1.28, this forward PE is down to 23.92. I mean, these metrics are just getting outrageous. And if you can get the stock under $80 per share, you're closing in on a forward PE close to 20. I think this is great value for a company that's growing 15 to 20% quarter over quarter, year over year. I think it's a really good buy, in my opinion. And I love what Netflix is doing compared to Disney and any of these other companies. I just don't see another player in the game that is being as successful as Netflix is right now. Disney's kind of, I don't know. I'm not a big fan of the content they're putting out. I just love everything Netflix is doing, taking risks and really, really just changing the market overall. Net profit margins, we're talking over double of what Disney's doing. And Warner Brothers is a joke right now. I don't know if Paramount's going to buy them or not, but Paramount was struggling to begin with, right? So I don't see a play in media that I like more than Netflix right now. I think between them and YouTube, they're stealing everybody's lunch right now, guys. I think Netflix is a great buy. I have an echo. Okay, let me see if I could change this. All right, can you hear me? Is the echo still bad? I'm working with a new mic, so let's see if it let me see if I delete this audio output. All right, let me know now, guys, if the echo got a little bit better. I think I had 2 different mics running. Is it better now? Thanks, Katie. I appreciate you letting me know. Yeah, I'm new to Streamlabs. All right, thanks, Nancy. Appreciate you guys. We're going to start doing these live streams a lot more often, where we can find different trends in the market that we like, kind of stocks that are kind of going overlooked. Everyone is so bogged down and concentrated on this AI phase that a lot of money is flooding into these companies that aren't profitable and not going to be profitable for a long time. So I'm going to start rotating some of my funds into companies like Netflix that are strong buys. And I think they're the best in the field. They're continuing to be profitable. I mean, just take a look at these earnings per share. It's crazy, guys. I mean, why would you not want to buy Netflix at these prices? Over the last year, the 52-week high from today's date was $134 per share. It's at $83.32 right now. That's considerable upside, man. And that's just getting back to that number. Over the last, the high, all-time high Looks like it's around 134 bucks. And we are getting obliterated, right? It's just been pure pain. Since what? Earnings back in April. It's just been a bloodbath from over 100 bucks a share down into the 80s. I think Netflix is a screaming buy out there, investors. Let me know if you guys think it's a buy. I would love to hear your guys' thoughts. And I'm also going to start running some option strategies, what we'll do in the mornings if I have time. I'm definitely going to do it on Tuesdays and Fridays. I'm going to come in pretty early in the mornings in the day. It's tougher for me because I live on the West Coast to get in here nice and early. But if I could do that, get in early, chop it up with you guys, show you some stocks I'm buying. I think Chewy is a really good buy right now as well. I want to maybe get this up to about 5% of my overall portfolio and then call it a day. I kind of like to build out my portfolio to 5%. I sold a lot of my stocks over the last big run up, got a little bit cash heavy, and I put some of that cash, we got 5,000 here, about 5,000 there, and another 5,000 here between these dividend players. So sometimes I take my free cash, and when I'm like, oh, what do I want to do? I hold it in like JEPQ, JEPI, QYLD, because every month they pay you a dividend. And you could see, I don't have a ton of dividend players in my portfolio, but if you go to investment income here on Schwab, you can see that the monthly average I'm getting is 152 bucks. So that's a nice little cash flow coming in each month that is just going to go reinvested into those positions. I do the drip, so it just goes back in. But 150 bucks a month is nice to just kind of keep this portfolio steady. I want to keep it like close to around $200,000. And I'm gonna start rebuilding up this cash. I want to probably rebuild this to about $5,000 in cash, and then we'll go over all my option strategies as well. As you can see, like every week I have a ton of different options going, and then ITM means it's in the money. So what I have to do is either roll those positions out or sell my shares or buy the puts depending on what option strategy it is. I take that on like a weekly basis. Here we are. These are all our option strategies. They're all out of the money except this covered call on Canadian Solar, and I have a call on Big Bear AI, $5 one. I'll probably roll this out. I'm only down like $15 on this, so I'll just roll it out. Same thing with Canadian Solar. To roll out an option, guys, I'll show you what you do. You just click on it right here. Sorry, I got to get a little sip. Got a little scratch in my throat because I don't really want to sell these shares. So I roll it out to like September. Gives us like 3 months of runway and gives us a little, excuse me, runway for the shares to run a little bit more. So I could probably sell the cover call out to 25 bucks, and I'll still get an $18 credit. So I'm breaking about even. At 26 bucks, we would have to lose about $30, $29 on this trade. But I think $25 makes sense. And then if it runs, just yesterday, it was up $2.50 a share today. It was at $18.20 yesterday. It's extremely volatile. So I don't like to roll these options out until the last minute because tomorrow it could be down 12% again. So you've got to really figure out when you're trading options, whether you're selling puts or selling covered calls, you got to get to know these stocks and the range that they trade in. That's really going to help you moving forward on like whether you should roll it or what you want to do if you actually want to sell the shares and then sell puts and try to buy them back at a cheaper price. But right now, we got tons of puts on CleanSpark this week. We got 3 $15.50s, 6 $17, 4 $16.50s, and 2 $17.50s. So they're all out of the money as we move into Wednesday's trading day. But what I like to do is if a stock's running and I have a lot of covered calls, I'm selling puts on the opposite side. So if it keeps running, I'm still going to make some money, a few $100s this week, just as the stock continues to run up. I appreciate you guys all tuning in. I do have some puts on Palantir as well. It was up huge yesterday. It sold off today. I did buy one share of Palantir today. We're up to 633 shares. I was up over 1,000, and with the recent run-up, I have sold about 400 shares of Palantir over the last year. That's kind of how this portfolio exploded, was with Palantir. And then it was up way more when SOFI was about, what was it, $30 a share or whatever. SOFI did sell off a little bit today. People are nervous and taking some profits, down around 5% today, under $18 per share. I do have one covered call for SOFI this week at $20. That's looking pretty good. I got a $17 put as well. And you always want to look out a little bit farther. I got one covered call at $18 next week for SOFI. I'm just kind of figure out where the big numbers are. So in the middle of June, the 18th, I got 10 covered calls at $19, and I got 10 covered calls at $18, right? They're the ones we got to kind of keep our eye on if we're going to keep them or we're going to roll them out. Hopefully, SOFI can trade in that range. They're all out of the money right now. I do have some Comcast puts because I do like them as a dividend player. It ran up huge, and then I sold out of my position, so I want to rebuy these shares because Comcast ran up huge. Where is it? I always forget Comcast's ticker, but they ran up huge, and then they've been selling off. If you look over the last 6 months, it was up to $32 a share. I was buying when it was in the low. I was buying here in the low $20, $24, $25 range, and then it ran up to 32. And once it was in the 30s, I started selling some cover calls. The shares got taken away, and then it's been plummeting. It's somehow down year to date, which is wild to me. Considering it was almost $33 a share, it's 24 right now. So what I'll probably do is I don't want to buy them at $27.50. What I'll do is I'll roll them. I'll kick that down the road at $25, maybe 6 months or what. We'll see what they're looking like. So if we go to puts, and I want to see 32 strikes, and then you can go down to all, and you kind of figure out okay, I have those 27.50s. Maybe if I roll them out to January 15th, $25, that's kind of where we'd be at. The bid and the ask, if we get in the middle of that, around $300 per contract, and we take a look at where I'm at with those shares, you kind of figure out, okay, that makes a little more sense to me to buy them at 25. That's a little more of a bottom to me. And then hopefully over time it'll run up again. So if I sort this by symbol, I can go and see exactly all the different ones I have in alphabetical order. It makes it a little bit easier to search. So I got a 22.50 for 2028, and I have the 27.50s in the middle of June. So it's only coming in, but these are different because Comcast had a weird split action, so it's not as bad. But if we roll these out, we'll see what the number is. We're down we're 150, something like that. Yeah, 138. And if we roll them to January, let me go down to 25. We're still ahead of the ball game. If we go to 22.50, we'd be down $20 per share. That's not terrible, but I like the 25. That's kind of where the stock's trading at right now. And if we go to 12.18 by December 18th, we're still up a little bit. And you could probably wait a little bit, see if the Octobers or Novembers pop up, but they're not up right now. So I'm comfortable with that. We'll still get $70 on top of each one of these contracts. So it'll be an extra $138. And in the worst case scenario, we got to buy the shares where they're at right now, around $25. So that's kind of my strategy. Yeah, so with SOFI, there's going to be some volatility for sure. We had a nice run up over the last, week or so. I'll go over to SOFI now. Here's my position, guys. I do own 6,500 shares of SOFI right now. But, I mean, I thought maybe we'd run up towards the end of the week and then dump on Friday, but we're still up about 8% over the last month. We were up to almost $19 a share, and then it's just ripped to the downside. A lot of stocks sold off today. I do think it's still great value, under $20 per share long term, but at $15, it's a no-brainer. Will we get back down there? I don't know. But if we take a look at the SMAs, the 200-day moving average, the 50-day moving average, the 100-day moving average, the 200-day moving average is like $23.19, I think, and the 100-day was over $19. So I want to get, as we run up towards earnings, guys, is July 28th. So I do think we could see a run on the stock in the near future as we just continue to beat each and every quarter. Estimates beat, estimates beat, estimates beat. We came in line with consensus this term, but I do think we'll get back to beating those numbers next term. So the earnings is at the end of July. I do think that the company's going to continue to grow well. If we look at the current price to earnings at 42 and the forward PE at 31, price to earnings growth at 1 is crazy cheap for this stock. It's crazy. It's not letting me just highlight this one number, but price to earnings growth, guys. The PEG ratio, anything under 2 is good value. And if you get close to 1, it means that this is not priced correctly with the growth that's happening with the company. So I always like to look at the PEG ratio for a company like this. So I do think SOFI has some upside ahead. Year to date, we're still getting destroyed. I mean, we're still down 32%. But over the last year, we're still up 33%. Over the last 3 years, we're up 160%. So, I mean, I know over the last year, it's been shitty. I mean, there's no other way around it. I mean, if you take a look from like the highs of November back in 2025 at $32, it sucks. So if you still like the company like I do, adding to your position does make some sense. I am a little overweight on SOFI right now when you look at this portfolio in totality, right? 31%. I want to get this under 30%. That's my goal. It's to like keep adding to some other positions. I do want to build out Netflix. I do want to build out ELF. I do want to build out what other stock? I'm just like kind of watching these AI stocks, and if it gets back down to like this, not these numbers, I'm up 60% on them. Maybe you sell some puts, make enough money to buy a share here, buy a share there. I do like this uranium position, UEC. I think that's a good uranium play. ServiceNow is a company that I like that should be able to turn it around. But I like ELF. I think DraftKings is set to rocket up too. When we take a look at DraftKings over the last year, another stock that was trading, around $50 per share, it's been pretty much cut in half, guys. So it did hit $53 over the last 3 years, but you want to take a look at the last year, $48. I think it could get back over $50 per share at some point. The numbers have just been, there's been no consistency with this company. So that's why it's kind of has some investors, do I want to play this yo-yo game with them? Because like the price to earnings are all over the place, but the PEG ratio at 0.7 is crazy low. But the price to earnings, it's hard to tell because this company's profitable one quarter and they're not profitable another. It's kind of a business that like some quarters are always shitty and then other quarters like football season quarter is always really good. So this Q3, it seems like Q3 all over the place is a mess. So we'll see how the next earnings report looks. And I do want to see some stability in the stock for sure. I don't know how Texas Roadhouse is comparable to DraftKings. That kind of makes no sense in my brain. And then there's Domino's Pizza. I don't know. That makes no sense. Charles Schwab, be better. But I mean, if you take a look at these numbers, the current assets continue to go up. We like that. The current debt is coming down. That's great for a company like DraftKings, where it's very capital intensive to get started in the gambling world. So total debt, total liabilities is going down. That's great for this company long term. But the total revenue is also going down, right? So I don't love that. I definitely don't love that. So we have to kind of figure out the long-term trends of DraftKings. I've held that stock for a really long time. Is it time to try to get my money back and then maybe put it somewhere else? It's definitely been a dog. You know, it's all over the place. Statements and balance sheet and income statement wise. Just something to take into consideration, everybody, you know. But all right, guys. Here again is all my plays. I'm going to show you my plays for this week. And selling covered calls were pretty successful overall. I'm pretty much around, I'm over a 90% winner. So that's another reason why you got to subscribe to the channel, guys. Big Bear AI, I'm probably going to kick that down the road. I only have 2 in the money right now. They're all out of the money for 6.5. We got the Chewy calls. We got 1 clean spark call. We got a bunch of puts. We got some Hims puts. DraftKings call. I'm definitely getting a little more aggressive with these DraftKings covered calls. I want to start to get some of my money back from this investment and roll that into other positions. I don't think I'm going to add any more shares of DraftKings. I do have around 700 shares. So I'm done adding to this position. I'm going to let it do what it does. I got the Nike call. I am going to keep building out Nike. I still think it's an undervalued play. I want to get my cost basis under $50. I've been adding pretty slowly. 3.5% dividend yield. I do like that as well. I'll probably get this up to around 200 to 300 shares. Check out my percentage of my account. Maybe we get it up to around 5%, but I've been adding pretty slowly. I want to see how the tariff stuff kind of played out with China and see what their game plan is to kind of get that Chinese market back in play. We got tons of puts on Palantir. The 122s, the 127 should all be good to go this week. We got a 145, a 146, and a 150. They're all currently out of the money, but Palantir did sell off, so maybe we have to roll them down the road a little bit. We'll have to see how that plays out. The stock got smoked a little bit today, but I don't mind it cooling off a little bit. I just want the stock to go up slowly and not get crazy. And then that's kind of where we're at this week, guys. All right, if you want to see more videos like this, let me know in the comments down below. I appreciate you guys tuning into these live streams. I'm going to start to do them more often where you can kind of see what I'm doing, why I'm doing it, and show you how I was able to take an initial $15,000 investment and over the last 5 years turn it into over $200,000. So that's kind of where we're at right now. We're up 147.83% in this account. I also have an IRA, so we will do some videos where I show you how I'm building my IRA and this main brokerage account. I do treat them a little bit differently. I have a Robinhood account as well, so I will kind of keep you up to speed on what I'm doing. I'll show you my big brokerage account. I will show you guys my IRA. I'll show you guys smaller Robinhood accounts and how I grew those accounts as well. Thanks again, guys. You are the freaking best, and we just hit 5K. Appreciate you guys. We'll catch you on the next live